Hey, what's going on, everyone? It's Mauricio again over here. I decided to do this video. I was in the middle of a chart breakdown, and I just decided well, I might as well record it so you guys can catch on and see so I can kind of explain what I am looking at here. This is kind of just a back test, so isn't nothing coming live. This is just kind of of me practicing reading my charts. So when I get ready for the market going live, today is Saturday, not February. It's March 14th, 2020. Kind of went back a little bit in this pair I'm breaking down today is the euro versus US dollar. Kind of just what I see here. Everybody views the market differently at the end of the day. So I'm just going to kind of explain what I see, why I see it, and where I started from. So as you can see, I'm actually, a few months back. I'm back in December right here in this. And this is where we currently are in March. So I'm just practicing, just kind of, playing around with it, refreshing my mind a little bit. Practice is always good when it comes to the Forex market. As you can see, I'm getting ready to go to do live. I just want to make sure my mind is on point and what I see back here, so I can kind of know what to expect when it comes to, moving up over here on this side of the market now that it becomes open up live this week. I really feel like Forex and just in general with everything that's going on right now in the world, the market's going to be moving pretty crazy. It's either going to spike up, spike down. So I just want to make sure I'm going to be on point with my mindset. So like I said in previous videos, that mindset is everything. It's all psychology thing. So I just want to make sure my psychology is on point when it comes down to reading my charts and utilizing my tools in the right way. Just, like I said, overall refresh. So I started breaking down this chart. What I actually started doing, like me, like I say, I always start on the daily time frame with the line chart there. So what I actually did before I drew like this harmonic pattern right here. So I'm starting to dabble with harmonics, not really too much. I'm not really too good at them. I'm kind of just marking them up if I see it. So that's why I marked that one up, just because I kind of saw something that, I've read about before. It looked familiar to me, so that's why I marked that up. But my main thing is, so actually, let me just delete that so it doesn't throw anybody off. The way I started here is just my basic technical analysis of support and resistance trend lines. So what I started here, I always start with my support and resistance on a blank sheet. So act like if none of this is here, and then I'll go in and explain on how I got to all of this right here shortly. So I always start on the line chart as far as my support and resistance, and I always do my red horizontal lines all the way through, just to make sure like those are my main support and resistance lines that I see on the daily time frame. So everything for me is like pretty much color coordinated when it comes down to the fact that I'm doing my, support and resistance lines. And then as I break it down, like, my 4-hour time frame, those will be either the color, green or blue, just depending on what my mode is or what I'm doing. I don't know. I like to stick with a little bit darker green when it comes down to the 4-hour time frame when I'm looking at all of this. So what I'm seeing right here is I'm just marking up everything, practicing for when the market does go live again this upcoming week. It's going to be opening up tomorrow on Sunday. So right now I see I'm just posting, my support resistance line. So as I just go back, just make sure I just hit my line where I can have the most traction here. So right there, tested, and then all the way through. So I mean these are just my daily time frames, horizontal lines. So right there is just right. I marked it right where all the peaks are, basically where they touched the most times, because those are going to be the most vital, important. So when it does come down to it again, the great thing about using horizontal lines is that you can put a horizontal line, a few years back if you want to, and it'll still be effective as long as it's within your correlation of where you're at right here within the market, kind of right here. It doesn't make sense to put a daily time frame line all the way back from 2018, way up here when the market is currently down here. So just keep it relevant where you are, and you can really space it out a few thousand pips or so. So like as you can, because you can see how it spiked up really heavily within the past, couple months or so. Past month I should say, how it spiked up really hard and then it's starting to come back down. So just keep it relevant. So this is relevant to me. Let me highlight it real quick so I can show you. This is price relevant. That's all relevant just because of the fact that there's a certain amount of space there, certain amount of space there. You can see there's a lot going on. So that's price relevant to me personally, the way I see it. So I just want to make sure I mark up all my support and resistance spots that I see within this relevant area. So support, 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 resistance, resistance. There's a little gap right there. So you can see those are just some main points that I see why I drew that line. This line right here, resistance, resistance. Let's go back, resistance and support right there. A little bit of support right there. Because remember, you can gap it up, you can have a little bit of gap, as I explained in the support and resistance 2.0 video. So it's kind of, this whole breakdown is kind of a whole series breakdown all at once. So if you're unfamiliar with some of the terminology I'm using in this video, please go back to the other videos and learn about the terminology. So you can see some more support and resistance lines there, an overlap, touch, kind of things, just why I drew that there. Touch there, overlap, and then as you can see how it's just breaking and testing there. Reason why I drew that one is those. Boom, boom. After that, what I did was I switched back to the candle, and kind of just, what I did was I went to the candle and I kind of, zoomed out just a little bit. So I went a little bit of, I guess you could say, irrelevant. It's not too relevant up here, where I did my supply and demand from right here, because it's the highest peak point right here that I saw. So I did my supply, I did a demand box right here, all the way, drag it through the way I show you how to drag it through, top of the wick of the bullish candle to the bottom of the body of the bearish candle, drag it all the way through. As you can see, it tested it heavy there. This past week it opened up with a big gap, so I just have that there. So I am starting to get ready, but I just, like I said, I'm gonna go back, refresh my mind, all that good stuff too. So I zoomed in a little bit, made it a little bit more clear. I really couldn't do much more on the daily time frame, so from here what I did was I went to the 4-hour time frame, zoomed out a little bit, and I started looking for market structure now. After my support and resistance lines was on, started looking for my market structure, where it was going. And then what I did was I focused on this area heavy right here. Let me delete that. I can redraw that. So what I actually did was, after I saw like that bullish bat that I had here, so I have a, my low here, my higher high, my higher low, my just another high, break it down, so that's my bullish bat. So as I saw my bullish bat going, saw bullish entries right here, boom, but it's also still in a bearish market because now it's still a lower high. So I really don't have a clear version of break of structure yet, as you can see, because we were in a bullish market here, came down, broke structure right here, tested again right here. So I'm still in a bullish, so all from when it broke structure here, and then if I break it down to like the 1-hour time frame, of course you're going to see a downtrend all within here to be able to tell you that it is a bullish market. Come back, you're going to see the retest of this broken structure right here, and as well as you can see, it's still in correlations with my support and resistance daily time frame. So as you can see how it's just heavy testing there, took a while to finally break, broke it, tested it, come back up, test it again. So I'm all in my market structure of, I guess you could call it, so here's my break of structure there. Let me change that to red. Boom, so there's my break of structure there. I'll drag it all the way through right there, because there's the retest as well as my lower high. So bullish market, boom, broke my structure right here, came back, retested, and then I can always pull out my fibs from this point right here, drag it on down, and kind of just use it as, okay, so boom, 50%, did a short-term type of deal right there, take it down, because as you can see, it didn't go to my negative 27%. But that's if I wanted to, but my overall focus, like I said, is on this area, so I'm just refreshing my mind on where I'm coming to and why I'm doing it, what I'm doing right now. As you can see here, I'm going to zoom in a little bit more and explain to you why I drew my trend line the way I did. So as you can see here, here's the break of structure here, came down, and then it didn't really, what do you call it, make another lower high like right in here. It just shot back up again. A lot of people would think that this would be the break of structure. I don't consider it personally the break of structure right here, just because as you can see, that's why I drew this thick red line right here. As you can see, it just tested it, and never really clearly broke it. It did clearly break it right here, but if I highlight this portion right here, and then I do it like, let's say purple, if I go back to the daily time frame and go to that purple box there, whoa, where'd it go? There we go. We can literally see that it never really clearly broke that line, as you can see here. So this bullish and bearish candle, that's just a tested market. Boom. That's my confirmation to make it, you know, not a clear break. That's just where it tested itself. So that's where I got confirmation on that one, that it wasn't a broken structure yet, until I actually actively saw this right here. As you can see, it actually clearly broke it, and then watch, I'll do all this purple. Oh. Boom, boom. Clicking too fast there. Bam. So if I go back now to the daily time frame on this one and read the candles on this one, you're gonna see it actually gonna make a pattern right here. Boom. There we go. So it's actually, you know, actual broken. It didn't do a test, because remember, like I said, a test is always bullish bearish candle right after, but an actual clearly broken line is bullish bullish, not bullish bearish. So see, if it was another test, this candle right here would have been bearish, but bullish bullish, and then finally started going bearish, and, you know, started doing some other stuff. So break it back down to the 4 hour. Boom. And then I'm just gonna, what I'm gonna do, since I said I actively just did this chart here, and I didn't really, what's it called, I didn't finish my markup or do my, where I would have placed my entries, where I'm looking at in this, because I'm looking to take advantage of this bullish, big bullish move right here, and where this yellow box is. That's where I'm going to break down my entries for you guys and why I broke it down. So boom, there we go. There's my break of structure there for this red line. So what I'm going to do now is pull out my Fibonacci tool, and like I said, I wouldn't have considered this the break of structure, so that's not, that right there isn't going to be my higher high. So there is my low. So like I said, I wouldn't consider that my higher high, even though it would have reached the 38.2. As you can see how I have it right there. Right here is the 38.2. But like I said, I wouldn't have actually cleared that as my break of structure, just because of all the tests that happen here. But what I'm going to do, I'm going to stretch it up here a little bit, and we'll go my point B up here. Boom, right there. And let's mark that off. So we'll go fib point B, as well as you can, you know, label that your higher high if you wanted to. So that's part of the market structure, higher high. Boom, boom. And then I'm gonna go here. As you can see, it retraced all the way down, pretty much all the way to the 61.8. Pretty close, as it broke the 50. It didn't really go there, but I also have a confirmation of my daily support and resistance here. So that's also a confirmation. So it's within the right zone. So as you can see right there. So then I would actually label that. Let me get in here too again, and I would actually label this my point A and point B of my trend line. So that's why I drew a bullish trend line. I'm also going to label that my higher low. Boom. So there's my higher low right there. Point A for this, because that's my low. Point B for my bullish trend line is going to be here, because that's a higher low as well. And then drag it on across, and boom. So as you can see here, that's where I'm currently at right now. And let me drag this a little bit more to the right here, because like I said, what I'm trying to focus on is this right here. How could I have taken this move right here? So as you can see, if I would have, so I'm going to break down where I would have seen my entry. I'm going to go, so what I'm going to do now is go to a little bit lower of a time frame. Probably the lowest I'll take this one is probably about the 30-minute, maybe the 15-minute, just to find my entry within this yellow box. So just keep in mind that since this is a 4-hour time frame chart, this is going to be a long move because each one of these candles are 4 hours. So it's going to be a real long move, but the payout is, you know, going to be great off of it. So let's say I would have entered, you know, somewhere right in here. I don't even know where there's a clear entry yet, but let's just say, oh, let me do this one so you can see the date and time. Let's just say I entered at this, right at the, you know, the daily support or resistance, right? Let's say right in there somewhere. Like I said, I'm going to break down a actual entry format right now. But overall, this move went all the way to my negative 27%, which would have made it my higher high. That's what would have been my take profit right there at that. So there's my TP1, TP2, and TP3. So I'm in that. Let's say I got in there and I got out there at the negative 27%. And that was for 156 pips itself. So if I would have done, let's say, you know, 156, it would have been times, let's say I'm doing a dollar lot, a standard lot on it, which would have been, so 156, we'll go 156 pips. If it was doing a dollar, standard lot, I should say. I'm used to saying the word dollar, I don't know why. Which is equal to $10 a pip. All I would have done is 156 times 10 bucks, which is basically equal to 1,500 bucks. Oh, put a comma there. So 1560. All I do is add a decimal to that. Boom. I would have made $1,500 in, how long did I do the trade for? It had been 7 days. So 7 days for that trade. 7 days and 8 hours. 24 bars. 156 pips. 7 days, 8 hours. Oh, let me get in here and edit it. So days, 7 days, 8 hours for that. I mean, at the end of the day, it's going to be simple math. So let's just say, I mean, and then as you go on, you know, your lot size is going to get bigger. So you go from a standard lot to 2 standard lots to 3 standard lots to, you know, more and more and more. And then the more you put in, of course, the bigger amount right here will change too. So in 7 days to make 1,500 bucks, it's not too bad, but I mean, like I said, at the end of the day, it's simple math. So if you're as soon as you start growing, I mean, you can definitely make a lot more. So 7 days, if you do, you know, let's say, oh, we'll do this, 1560 times 4 weeks. Let's say you do that 4 times. Oh, sorry, I'm using my calculator here. Boom. So if you do that, because there's 4 weeks in a month, I mean, so times 4 weeks, you're gonna equal out to $6,200 and $6,240. And let's say you do that in a month. So total income is, oh, income. I mean, shoot, I'd be fine with, $200 in a month. And then, like I said, if you do that to 2 lots, $20 a pip, it just doubles. So just do the math yourself. Boom. Be looking at, 12 grand in a month. So on and so forth. I mean, there's a lot of big possibilities that it comes down to when it comes to trading Forex. I mean, you got to put in a simple perspective. Of course, you're not going to be making this type of money right off the get-go, depending on where you start, depending on how much you invest. Like I said, when it comes to risk management, you got to make sure you're putting the right amount of risk on your account. You don't want to be putting a standard lot like that on a $100 account, because it only takes 10 pips and boom, there goes your $100 right there. And just keep in mind, this was a big move. So I'm sure that being a big move right here, if someone really entered this move, and the way I see it, it took a lot of patience. A lot of patience. So big thing on Forex is patience. So what I'm going to do now is finally go down into this yellow box a little bit, break it down. Let's go to the 1 hour time frame. I'm going to break it down, kind of see what I see in here. Let's see what I see. And we'll find our entry points. Let's see if I find an entry point. I really don't like doing entries on the 1 hour time frame, but we'll check it out. Let's see what we see. I mean, you never know. That's why you always got to be in Forex. You got to be very patient, but you also always got to be flipping through your time frame so you can kind of know what you're looking for. So we'll go down to this yellow box and find our entries. Let's see right here. I'm watching my EMA and SMA right here. Just act up a little bit. As you can see, overall downtrend. What I'm looking for is my entry point, because as right here, as you can tell, remember it broke structure. Broke the structure. Now we're looking for the retest, which it's right along the 50%, which I believe is this one, and then my daily support and resistance is this one. So I'm looking for is an entry along down here, but a good entry. I can kind of see one kind of right off the bat as well. I see a pattern forming actually. So this pattern I see forming is just a triple touch. 1, 2, 3. So there's your triple touch there. As well too, I guess you can say off of the exhaustion of to the bearish side right along in here. And since it didn't break this support right here. So right here, right there, the support there is I forgot what you call that pattern right there in the green circle. I think evening star is what you call it, because the doji candle right in there. I'm sorry, I'm getting my terminology a little bit mixed up. That's why I'm doing this video, so kind of refresh myself as well as, learn as we go. That's the whole point of this, is just to help everybody learn, help me learn, and share ideas, which is awesome. So there we go. As you can see, that pattern formed there. Boom, it's breaking up to the bullish side. Okay, so it's not breaking. I mean, you can kind of just see what's going on. EMA and SMA are really close. It's kind of, there's a lot of noise right in here, but overall, I know what I'm looking for, so I really haven't found it just yet. So what I'll end up actually probably initially doing is drawing a support and resistance line right along here. Just something like this, just a small short-term one, which will be a random one, which I'll probably do that one blue, just since it's a random line, because I don't want to do it red. So I did the thick red line as a break of structure line. If I'm going to do a short-term support or resistance line right here, it'll be blue just because it's random. I didn't really break down any 4-hour support or resistance lines. I just, at this time, I didn't see a need for one. And as you can see, tested, didn't break, tested. So what I'll be looking for here, I guess I could have entered any time along here. What I'm basically going to be looking for is just a bullish engulfing. I'm on the 1 hour time frame, so I really don't see an entry, a really good entry anywhere within this yellow box right now on the hour time frame. I see it starting to move in my favor that I want it to, just because it hasn't broke. So let's zoom in a little bit more, and let's go down to the 30-minute time frame. It's going to be a little bit back here. Probably have to go a lot farther back. There we go. Boom. Zoom in a little bit again. As you can see, what I'm looking for is a bullish engulfing. So I guess for a short-term trade, I mean, this would have caused definitely your psychology to be thrown off. You see this bullish spike right here after this test. I could have easily entered in. Let's change the color to lime green. Lime green is going to be my entry points. So I could have definitely entered right along that line, which after this candle closed, I would have entered there. I would have saw a little bit of drawdown, but then I would have automatically been in profit. But for the move I'm trying to make overall, I definitely got to expect this. So as you can see, if I would have entered right there, right at the green line, I would have definitely seen this total. Boom. So I just know what I'm expecting. So definitely what I would have done at this point, since it's early in on my trade, what I would have done personally is if I would have entered there, let's do this one. Let's say enter right there. What I would have done, I would have definitely placed a stop loss, but I would have placed it well enough to where I'm definitely going to be taken care of. So see, with this daily support or resistance line, I would have definitely, for the move I'm trying to make, 18 pips, 20 pips, you know, I'm definitely, and if I'm doing a standard lot, a 20 pip loss right there would be a negative $200 deal, basically, is what I'm risking my account. Let's say I have, you know, $1,000 in my account. If I'm risking 200 of that, I'm risking 20% of my account right there. So I guess it depends on your risk that you want to do on your account, depending on what your account balance is, depending on your lot size that you're using, and depending on your overall move. So I guess overall, not bad for, you know, that's usually me personally when I do a trade. That's usually what I risk, anywhere from about 10 pips to 20 pips. And I usually do trade a standard lot, or I'll do half a standard lot, which will be 0.50. So I try and stay anywhere. Me personally, I'm more of a risk trader, so that's why I see a lot of guys putting only, you know, 1 or 2% risking their account. I'll beef it up a little bit. I'll risk about 20%, you know, 10-20% anywhere is where I'll risk from, especially because I know my risk to reward. I guess you could say I'm more of a swing trader in general, but I will take some intraday trades, which will be like short-term trades along the way to kind of build my account along the way. So I can enter within here and just take these short-term trades, you know, as long as I keep following it. So at this point, I would have definitely done that. And that's where my stop loss would have been. So 20 pips. As I showed you guys, it went for a total of 156 pips or something like that. So definitely that's the risk I would have taken. So I'm going to leave that, and then I'm going to draw this a little bit bigger. And then I'll go back to the 4-hour time frame and show you like how it all played out. But like, look, I would have taken a small trade. Just, you know, this would have been like during the day. This would have been a full trading day for me. Oop. Gotta get out of that. So let me delete that for now. So keep in mind, this green line right here is going to be my entry based off of this candle right here, bullish engulfing. I would have experienced a little bit of drawdown, like I said here. Not too much, but this is, remember, this green line right here is for my overall trend that I'm trying to do, my big move that I'm doing. So after I entered that one, I would have definitely seen, you know, a total of 10 pips in drawdown. But for the move I was trying to make, for the move I was trying to accomplish, I wouldn't have done my risk there, just because of the fact, as I saw it, you know, the break there, the lowest point was there, and which the lowest point is a total of, you know, 12 pips. I definitely will probably add an additional 10 pips to that. So that's why I put my risk. I'm risking 20 pips or whatever I did. That's how much I risked at the end of the day. Just because I know if it breaks that last previous low right there, then I know that my move would have been thrown off. So that's why I would have risked that much. So as you can see, I would definitely wouldn't have put in a stop loss there, because it would have automatically taken me out. when I experienced this drawdown. So total overall drawdown, I would have seen 12 pips of drawdown, which ain't bad at all for the type of move I would have been that I'm trying to do. And then as you can see, I'm going to take little intraday trades along the line here, just based off of fibs and market structure on the 30-minute. So as I'm watching this play out, this would have been a total of probably, let's see, actually let me just let you know, from when I entered to here, I guess 3 days total. 3 days total, not bad. But in 3 days, just watching what I do and just watching it very, very closely. So as long as it's in the yellow box, that's when I'm watching it closely. Once it breaks out of the yellow box, I could kind of get a little bit relaxed and kind of just sit back and let it do its thing and check in on it here and there for the trade I'm doing anyway. But while it's in the yellow box, I'm kind of, actively watching it, checking in on it every single hour, kind of seeing what's happening within the market. And while it's doing that, I would have definitely done some smaller trades, like I would have done a Fibonacci tool there, just based off of market structure. That's it on the 30-minute time frame. As you can see here, boom, 38.2. Just a small little trade, enter right there, boom. And then I would have got out at the negative 27% there. Or I could even hold that trade. So that could have been my second entry for my overall thing. But if, let's say, I just don't want to do that at this time. Come on, man. Thing. Okay, there we go. Trying to get it flat there. So just for a smaller trend that I would have done, like I said, I could have done this entry right here for part of the long-term trade, but let's just say I didn't want to do that and I wanted to take a short-term trade, enter there, just based off of that engulfing pattern right there, bullish engulfing here, enter. And since it's at the 38.2 as well as with the support and resistance line, and for short-term Fibonacci, I would have taken it to the negative 27%. It would have reached there. There's a quick 18 pips there. Again, since I'm doing that short-term trade, that trade in general took a total of 6 hours. So if I break it down again, 6 hours, I made 18 pips. And since that's more of an intraday trade, I would probably done it for a little bit more. I would probably put a little bit more risk on my account, but during this trade right here, I would have definitely been watching it for the total 6 hours. Probably not sitting at my desk for the total 6 hours, but definitely actively watching it just for this short-term trade, because of the fact that I'm probably going to do, what was it, a total of 6 hour trade for profit of 18 pips. I'd have probably done, I would have risked my account a little bit, or I would have had a separate account open. It's always good to have 2 broker accounts open, actively trading, one for your long term, one for short intraday trades like this. So I would have done my second account, let's say 2 standard lots there, which is times that is equal to $20 a pip. Oh, too many decimals. $20 a pip, which is 18 times 20 at the end of the day is always going to equal out to, let's find it down here. A quick and easy $360. So a total of a quick $300 in 6 hours, almost 400. It's not bad, because that would have probably paid for all of your swap fees and all of the commission that the broker is going to take for your long term. So that would have definitely paid for all your fees and stuff like that for your whole 7-day trade. So definitely what I said earlier on the big trade. Where's it at? Where's my math at? Let's see. Where'd it go? I didn't delete it. Let's see. Okay, there it is. So definitely, oh, let me delete that part. So my definite total would have been that would have been my total profit after fees, since that little trade would have paid for my fees. So as you guys can see, that's what I would have done. This is me just back testing the market here. This video did go a little long, but that's kind of just what it takes on when you're practicing. Remember, practice does make perfect. So just keep practicing, keep utilizing your tools, just keep your mind sharp at all times. Just been like, oh, I could have done this here, or I could have done this here, I could have done this here. So then when you're reading it back, remember, like I say before, whatever happens on the left hand side happens on the right. So then now that you actually go to the live market when the week starts and you see certain patterns and certain situations like this, like I broke down real quick, when you see that happening, where's the live market at? When you're going to see that happening here or throughout the week as you're watching it, like here, so this will probably be the next spot I break down. And since I practiced that, I'll probably break down all of this from the supply and demand that I drew overall. I'll break this down probably on another video and see what I see, and just kind of get ready for the live, as well as I'm going to start doing like you know, daily, I don't want to do daily updates, maybe every other day, do daily videos, post them real quick, and kind of see where I'm going with that. So that's my overall chart breakdown. If you guys don't know what Forex is at all, please let me know. I would definitely love to help you guys. My whole overall goal is to be doing a training course, and I do have a website for everybody here. If you do know a little bit about Forex, this is a free tutorial right now that I'm posting to kind of just show you guys how I see the market. But if you want to learn more about Forex, I do offer a full beginning to advanced class from basic terminology of Forex all the way to through these tools I use. So if you guys haven't seen my website, go check it out. It's called globaltakeoverfx.com. In there, I have my personal story of who I am and what I do, why I trade, and where I currently am, my overall goals for everything, and where to go with this. So let me know. I would love to help you guys out. I would love to have you guys a part of the team. Love to grow together. Let's all be successful together. Everybody stay safe out there and have a wonderful night. Thank you for joining me on this video. Greatly appreciate it. Have a good night. Peace out.